welcome back to the LAGFOREX channel. Today, just giving you a quick update on the US dollar to the Japanese yen market. This is something I've actually traded a lot this week. One of the few markets I have been seeing that has been producing structure to me that I found tradable. So I'm just going to dive into the market, give you a quick rundown on exactly why I was looking for the positions I did, and then also a rundown on how I entered the positions and how those positions played out. So as of right now, we are currently in the New York session on Thursday, so we're not quite at the end of the week, but as everybody knows, typically on a Friday, the volatility does start to die down. However, this week we are looking at the NFP, so we could see some madness in the markets. If the results deviate away from the forecasted results massively, we can definitely expect a lot of volatility with that dollar. So I would actually prefer to be out of any trades by that Friday, by the time the New York session opens and the NFP result is coming, because it is just extremely unpredictable. It is one of the most highly respected fundamentals that we get, just because of the insight it gives into employment data. I think the people who run that fundamental are analyzing millions and millions of payroll statistics. So it is definitely one of those fundamentals that the governments use, the economies use, to get a real gauge of how consumer spending is going to be moving forward, which is definitely a huge factor into that economic activity. However, without further ado, we'll jump into this market and I'll actually explain through now what I was seeing. So to start off, this market was something that was moving fairly sideways for a while, even to the left of the price action we're currently seeing. It was a lot of up and down within a sort of set range. Of course, we did have some liquidity grabs within that range, as we would always do, but nonetheless, it was still pretty much range bound. So at this point, the first thing I noticed, okay, we're going to start building some liquidity again. We have that high volume push through, so we clear the liquidity. From here, I was actually expecting price to start breaking down. Typical by these movements, we induce sellers in from that area of liquidity. We have that high volume push through, so the smart money operators are activating those buy positions to manipulate the direction and the price of that market. Afterwards, after showing that injection of momentum, after showing to us signs that sells must be valid now going forward, it did actually continue higher, again doing the same thing. In this region here, we've had more inducement. Before that injection of momentum, we have that high volume push through. We wait around and then we injected that move lower. So sometimes it is better just to remember, use your higher time frames to really understand, because I guarantee if we were to use those higher time frames, we should have expected that this move would have happened and we could have disregarded this down here. So anyway, regardless, after this happened, after we injected that momentum, that's when price eventually came to break these lows, break that structure, and give real signs that bearishness was going to be confirmed. So after this, we had price trade back up. We tapped into this buy before sell candle. We found supply there. And from this point, after that reversal, and then after breaking this low that was now set in the market, to me that was perfect signs that moving forward I want to be a seller in this market. We'll identify some supply zones, find a way to activate those sell positions and be holding moving forward. So now diving into this area, so this around here was that previous break of structure. I'll just scroll across to that. You can see we had that break of structure there. We set that new low in the market, and then we traded back up. As I said, we found supply in this region, so in this final buy before that sell-off, we found supply in there, and then we made that move lower. So after this happened, we came across again to set a lower low, so our new final target in the market, that was down here. So moving forward, I wanted to try and get in off a supply zone and then try and trade that straight down. So I identified again the last buy before a heavy sell-off in this region. We saw price start to make that move back up into it, and straight away I noticed we were having signs of a distribution, because the first thing that caught my eye was this inducement. I'll dive into that now. Yeah, so as we see here, we had that inducement, we had that creation of a liquidity point. So price came in, traded in this range, created that inducement, induced early sellers into the market as they thought this was a level of resistance. Let's get in on our longer term holds. Now, what do we see straight after? Another high volume push through. And if we go on a 5-minute, you can see the reasoning for this position is because there is a wick that comes up. So price has come up shown signs again of a reversal lower, and then we had that high volume move up. So I've taken that high volume push through as a supply zone, and then I wanted to see a UTAD or an LPSY actually come to mitigate that before moving lower. That's exactly what it did. I had a pending order set at this point to try and be a seller once it tapped in. Of course, the stop loss just above the high set in the market by the upthrust. That is typically where you would want that when trading a distribution. And then from there, price started to trade down. So as I would usually do with a position like this, I made use of a partial, because although we did want to be a seller in this market longer term, we have to account for the fact that once price does break this low, in scheme of the lower time frame structure, in the scheme of this, we've put in lower high, we'd come down, put in a lower low, and what we could therefore do is then want to make a push back up to mitigate areas up here, and if so, we are then liable to a stop loss hit. So just making sure we take a bit of a position off, get some profit secured, so that if that was to happen, we basically almost cover ourselves for any losses that we may incur. However, zooming back out, as stated, price made a push down, we took the partial, and then it continued with a move lower. Now, we never quite came low enough down to the previous low, which it's not the best sign in the world, because it can be confirmation now that there isn't enough supply in the market to continue with this bearish run. However, we did still have this major distribution in the market, that weak to strong hands, the introduction of supply. So I'm still confident that until we start breaking some of the liquidity highs, we can still look to be a seller. Even though bearishness hasn't delivered us the best confirmation we desired, it is still not fully invalidated. So anyway, as I said, once price started trading down, we started to have signs of an accumulation down here. Price started to feel hesitant to really push in that lower low. And what this could mean is that price quite simply needs to come back up, find an area of supply to introduce more into the market in order to make that move lower that it desires to do. So after this happened, after I saw price start to reverse, and after this break of structure, that's when I was like, okay, now I want to identify a supply zone that's most likely going to mitigate. So to me, what would that be? Anybody who knows the smart money concepts, last buys before sell-offs, that's exactly what we have here. A major buy candle before that big move down happened. And price did exactly what we wanted. It slowly traded back up, tapped into that zone, and made that reversal. But once again, through the use of inducement and momentum, which is a brilliant strategy to implement within your analysis, because it's a great confirmation that a reversal is ready to happen, and some good entry confirmation as well. So if we move over and really look into this point, you can see here that we've had the same thing. We had some equal highs, some liquidity created, signs that a resistance level was being introduced, signs to technical traders that a sell here is valid. Straight after that, we have that high volume push through. The purpose of that, of course, is to come and mitigate a supply zone. That's typically what inducement and momentum is used for. It's to get early sellers out of the market, manipulate them out, then they find that supply and make their move lower. So by the time that this happens, by the time they've mitigated and start making the move lower, they've already manipulated the majority of the sellers out of the market. So when they take that move lower, they're the ones that are making the real profits. So regardless, after this, price started trading down. So I wanted to try and be a seller again, because I thought at this point, we should now be looking to create that lower low in the market. We've come up to this supply zone, and in my eyes, this should have introduced enough supply now to make the move happen that we were looking for. Now, ideally, we would have tried to get in on this position, maybe had a pending order set. This is something I personally missed, but anybody in this market that managed to catch it, well done, because that is just extra profit with a very nice tight stop loss. So if we were to have hit this, we could have had that stop loss as tight as 10 pips, and of course rode that down to the previous low. That would have been a nice 6.7 to 1 risk to reward. So depending on your risk, that is a lovely percentage return. Anyway, as I started trading during the New York session, I noticed that, okay, price was trading down. I'm going to use the lower time frames now to try and find an entry to really ride this move lower. More of a scalp-like trade. The lower time frame trades, not as much as a swing trade as this one was. I'll dive into that one now. Okay, so the same process I've used many times now. and I've explained many a time. So I saw some inducement, and then we had that high volume push through in order to create momentum within the market. Now I assume then, once again, this high volume push needs to be mitigated before we make a move lower. So once I saw price tap back in, I took an entry here. So this is live, this is updating live, and I'll walk you through this trade. You can see how I would go about this. So as I say, price tap back in, I took this as the mitigation and put a sell position on. Now from here, price has actually consolidated, and you can see at this point it's taken me out. So I'm not going to lie, I'm not going to say that I did manage to catch a perfect trade. Losses like this do happen. Now we have to look at what's really gone on here. Now this could just be too much of an aggressive entry on my behalf, because if we were to really refine this zone, how I would typically do it, you're taking it where that real high volume push really starts. So after showing signs of reacting to that inducement point again, this really is where we open that high volume position, and that would have been my more refined zone. Because if I just use the brush tool now to try and draw out exactly what I mean, what's typically going to happen at an area of inducement is we're going to, of course, have those equal highs, have multiple reactions to that level. And then what's going to happen before we do inject that momentum is we're going to show signs of another tap. And just as we start to reverse, that's when we blow through. So our zone would be this area, because this is that real position that was opened by the smart money operators in order to clear the liquidity and clear that level of inducement. So as you saw, my main zone there was actually this whole leg, whereas typically I should have actually looked to refine it to this real last buy. And now when we look into this position, what's happened is I was misled. I thought that this tap in here was what I was looking for and the sell position that I desired. But what's actually happened is we've created even more liquidity, even more inducement by range bounding price again. And then after that, we've had that high volume push through, potentially injecting momentum now. And what that move has the purpose of doing is fully mitigating that exact position that the smart money operators opened for this area in here. So moving forward now, I'm actually going to be watching this again, because if I am seeing signs now of momentum being introduced, I would actually look for a re-entry. Because this is just something I simply missed, this is going to happen. I didn't refine that zone big enough. You know, sometimes we may just have a very shallow tap into that area before the move lower. Sometimes we will have a deep full mitigation that has happened now. Looking into this, I could really have argued that the stop loss should have been higher. But after making this trade down, at this point right here, I actually made the decision to move my stop loss tighter. It was originally above this high, but I decided to make it tighter because from here, this was brilliant signs that momentum had been introduced from this area, and that there was no reason yet for price to actually trade back up until we set that new low. So in my eyes, I thought, okay, we're going to follow with this structure down. We're going to start protecting these highs and then continue with that move lower. But of course, all we've done is we've introduced a bit more liquidity again. We've then wiped out all of that liquidity in the area, fully mitigated the position, and hopefully now we'll make that move lower. As I said, I'll be watching this. I'll be watching to see how price reacts from here. If we can get another entry, we will do so. But because I did move that stop loss lower and refine the stop loss even tighter, this for me is only going to be about a 0.5% risk, if that. So because of the trades we won in the past few days, I'm completely covered for that. Still up a very nice 4.5% for the week, risking 1%. So regardless, before this video goes on for way too long, I think I've touched quite nicely there. Done some good analysis with you on the market, explained exactly why I took the trades I did. And then moving forward, you can actually watch yourself how price delivers from this point. So exactly at 2:51 p.m. GMT time, watch how price reacts from this area, because my prediction is that after creating an inducement point, a liquidity point here, and clearing that with high volume, tapping into this refined zone, we could very much now see that momentum injected lower. Keep your eyes out. And as I round this video up, I hope everybody has had a brilliant trading week themselves. I hope you've managed to learn a couple things from this video and try and explain in as much depth as possible without getting too confusing, just so that you can pick up on some of the concepts I use within my trading to implement into your own strategies and hopefully become more successful yourselves. So I hope everybody's enjoyed. If so, make sure to leave some feedback in the comments. We're always looking at ways to improve. Leave a like if you enjoyed, and I will see you on the next video on the LAGFOREX channel.